If you're a futures trader, you're probably sick of all of the random candlestick patterns and candlestick strategies that never really work with any consistency. But I have good news for you. Single stock futures are coming to the market very soon, and this is going to open up an entire new world of futures trading. So in this video, I'm going to break down one of the best strategies that you'll be able to use now that single stock futures are going to be available. So for those of you who may not have heard, single stock futures are coming very soon. They are currently pending completion, but they're set to launch in summer of 2026. And initially, they're going to be available for 54 US listed stocks. They're going to be from the S&P 500 and from the NASDAQ 100. Some of them, to name a few, are going to be Apple, Nvidia, Tesla, Palantir, AMD, Walmart, Disney, and Visa. And the way that they're going to work is that one contract for any of these individual stocks is going to represent 100 shares of the underlying stock. Every single tick or every single penny that the stock moves is going to result in a $1 profit or loss per contract that you own. So in other words, if you were to buy a futures contract for Apple and then Apple moved up $1 from the price that you bought it at, you would profit $100 from that one single contract. And the reason that this is such a big benefit and such a big deal is that we are now going to be able to control 100 shares of an individual stock for a much smaller amount of money. Now it's going to depend on the specific margin requirements that are going to be put into place, which will likely be different from broker to broker, but it might cost only $500, $1,000, or even $2,000 to control 100 shares of an underlying stock, whereas if you were to buy 100 shares of a stock like Apple or Nvidia or Tesla, that might cost you $10,000, $20,000, $30,000 in order to do that. So this leverage in the futures market with these single stock futures, although it does technically bring on more potential risk for those that don't necessarily know what they're doing and they're not managing their risk, it's also going to allow traders with smaller accounts to take advantage of the volatility in these stocks with a much smaller amount of money in their brokerage account. Another huge benefit to this is that we no longer now have to rely solely on candlestick patterns. We don't have to just trade indices or commodities. We can now trade these individual stocks, and we can take advantage of all of the different stock trading strategies that there are already out there with proven results and with proven success. And one of those that I've been using personally for multiple years now is the RSW strategy. So the RSW strategy, simply put, is going to be for relative strength or relative weakness when compared to our baseline, which is going to be SPY. SPY is for the S&P 500, and essentially when you have a stock like Apple, like Walmart, like Tesla, like Google, whatever it may be, these stocks should, in theory, kind of be moving hand in hand with the S&P 500. But at any given point in time, we're going to have stocks that have relative strength and stocks that have relative weakness. So relative strength might be, for example, Apple is trending up over the VWAP while SPY is currently at the low of day. This is going to give you a long bias for Apple because Apple is outperforming the market today. It's showing relative strength. And not only is Apple now going to be less susceptible to bigger sell-offs if the market does start to move lower, but Apple is also going to be the first one to spike and show extra strength when the market does start to recover from its current dip. An example of relative weakness might be that we see Tesla forming a lower high while SPY is forming a higher high. This is going to give us a short bias because Tesla is underperforming the market, and it is going to be one of the first stocks to sell off then when we see the market start to pull back or start to dip. So to give you a quick example of what this might look like on an intraday chart, we have the 1 minute chart for SPY on the left and the 1 minute chart for Google on the right. These are both for the same day, taken at the same time. And we can see that if we take a close look at the morning, right around 10:20 a.m., we have SPY, which forms a higher high, which is circled on the chart, well above the previous high. And at the exact same time, Google is forming a significantly lower high, and it also happens to be forming that right around VWAP, which is starting to act as resistance. This is a great sign of relative weakness in Google when compared to SPY because it's not all the way up at the highs like SPY is, and it's also turning the VWAP into resistance and setting up for a move lower. So you would want to be short selling there into the VWAP, into that lower high, to either capitalize on these quick sell-offs that happen after VWAP rejections, or to just hold through this entire consolidation and to be able then to capitalize on the sell-off that happens later in the afternoon. So having two charts up, one for SPY and one for the stock that you're comparing to SPY, is one way to go about using this RSW strategy and finding stocks with relative strength or with relative weakness. Another way to go about it would be to use the comparison indicator here. This is in Thinkorswim. Most platforms that you're using will likely have some kind of similar indicator that you can use as well though. And what we're going to do is go to Studies, Edit Studies. We then want to search for Comparison, and we're going to add this indicator onto our chart. If we go ahead and click on the settings icon here, we can change this to a white line. And this is going to be for the SPX, which is the same as SPY, just representing the S&P 500 as our baseline for this relative strength or relative weakness. And we can see now that this is added onto our chart, we have a line for the S&P 500 on top of the chart here for Meta, which allows us to very easily see if Meta has any relative strength or relative weakness when compared to the general market. And right now we can see that the general market is in a very clear downtrend. And on the other hand, Meta is holding above the VWAP, trending slightly higher, showing that there is some relative strength here in Meta. So if I was looking to trade Meta, I would have first and foremost, of course, a long bias rather than trying to short sell. And I would be looking for dips into the VWAP to capitalize on this stock's strength. Because again, not only is this going to be less susceptible to selling off with the market, but it's also most likely going to be the first one to run back up into these highs and potentially break out to new highs once the market does start to bounce back up from this current pullback. And you can see here, if we go through some other stocks very quickly, how easy it is to identify potential relative strength or potential relative weakness when you have this indicator right on top of your chart. So I do recommend doing that, especially if you are trading on a smaller screen and it's a little bit more difficult to have multiple charts up side by side. This is a great way to kind of offset that and to still be able to take advantage of this strategy. So if you enjoyed this strategy and you want to learn more about it, we teach it in much more detail and in much more depth in the Market Master group. You'll get access to the Day Trade Bootcamp, which has 3 separate trading strategies taught within them. One of them, of course, being the relative strength or weakness strategy, also known as the RSW strategy. There's also going to be some examples of this strategy being executed in real time. And very soon, this is not only going to be able to be traded in the stock market, but in the futures market as well. On top of that, aside from the Day Trade Bootcamp, you'll also get access to the Market Master group. And here in the Market Master group, we have a channel that is completely dedicated to RSW signals for this strategy. We'll tell our traders exactly what we're seeing in terms of relative strength and relative weakness, and if we're looking for a buy or a short position based on that chart pattern. So I highly recommend you come and join us at Master the Market using the link down below in the description if you're looking to take advantage of this strategy. But regardless, thank you for watching, and I hope you found some value in this. If you did, please make sure to give the video a like and subscribe to the channel. Thanks again for watching. I hope you enjoyed, and good luck with your trading.